my voice clear? Hello everyone. Voice clear?
Hello everyone, can you hear me? Hmm. All right, Ankita will be joining us in some time. We are facing some technical issue from our end. Just give us 5 minutes so we fix it quickly. Okay? Is it fine with you all? Hello? Okay, just give us 5 minutes while we fix this.
Now, is my voice clear? Hello, everyone. Can you hear my voice? Okay. Okay, we start with our query session. What do you want to know in gap analysis? Abhijit, what do you want to know in gap analysis? Okay. Three types of gap. Okay, there are three types of gap. One is you can say a breakaway gap. One is a runaway gap. And one is an exhaustion gap. First of all, gap means a zone where no trading has taken place between two consecutive days. So when I'm saying that there is a upside gap, it means that between the high of previous day and the low of today, there are three kinds of gap. One is a breakaway gap, one is a runaway gap, and one is an exhaustion gap. The most popular ones. Okay. Now, first of all, what does the concept of gap mean? Gap means an area in the price chart between two consecutive days where no trading has taken place. Okay. So, for example, yesterday the stock had made a high of 750 and closed at a price of say 730. Low was 700 and opening was say 710. So the high of previous day was 750. Today what has happened? The stock has opened at say around a 780 zone, made a low of 760 and ultimately closed at a price of say 820 and the high was 825. So it was a very good massive green candle and the closing was above the opening. But between the high of today, between the low of today and high of yesterday, that means the high of yesterday was 750 and today the low was 760. There remains a gap of 10 rupees between 750 and 760. So this is called a gap. A gap, when it happens on an upside, is a strong signal that the bulls are very strong on the upper hand. Sometimes the stock may have been in a range of 750 for a long time, maybe 750, 752, 748. It was making a high and it used to fall from there. And after a long time today, the stock has moved up with a gap and has actually left a gap between 750 and 760. This is called a breakaway gap, a breakaway from consolidation. When this kind of gap happens after the stock has been in a range for quite some time or after the stock has made quite a bit of correction and was in a range for some time, when this kind of upside gap happens where the stock closes above the opening and there remains a no trading zone between 750 and 760, this is called the first round of fresh movements by the bulls. So this kind of a gap shows that the bulls have got command of this stock and you can take a buy once you are confirmed that there is a gap. Now what happens when you are taking a gap trade? It shows that it will not stop here, the stock, with just 800. For yes, I'll show you. Yes. I'll show you it in the chart, but first you should understand the concept of gap. Since you're not understanding three of the gap types, let me first explain you and then I'm going to show you with examples in the chart. Okay, I will show the chart. Don't worry. Okay. So this shows that this is a breakaway gap and this momentum on the upside has just started. Okay, once this momentum has started, it shows that the bulls are going to be in control of this stock. Whenever the stock falls for a correction after a strong move on the upper side, this price of 750 will, or this gap zone or no trading zone, will act as support for the stock. So whenever the stock comes back around 750, say around 745, this will be a very good buying zone again. And if the stock again takes support from here and starts moving up, it shows fresh round of upside move. Is my voice clear to everyone? Yes, okay. So this is a kind of breakaway gap, breakaway from a consolidation or from a zone. When we have moved quite a bit on the upper side from here, say up, we went on till a price of say around 850, 870, then 900. So after that, what happens that sometimes you find another gap in between, an upside gap again. So say today the high was 900 and next day the low is say around 920. So high of today is 900 and next day the low was 920. So between 900 and 920 there again remains a gap zone. This is called a runaway gap. This is showing that we are almost halfway through this trend and the momentum might give some correction from here, but for the time being 2 to 3 days this runaway gap shows that we are moving more on the upside. So the momentum is with the bulls. Whenever the stock falls again from upside, this price of 900 to 920 zone will be a very good support for the stock. So an upside gap in a very strong uptrend is a very good support level. Runaways shows gap, that is a gap in between after the breakaway, shows that this gap is just the midpoint of the whole trend. We have more upside to come in the coming days. Now when after the stock has say moved till 1000, now what happens, you find another gap. Okay, that gap is called a exhaustion gap. What does the exhaustion gap mean? That the word exhaustion itself means that we are tired. Same way, exhaustion gap means that we have moved quite a bit on the upside and the stock has started a very strong move from the price of 750, has went on to make 1000, and now at 1000, 1020 we are getting a gap. That shows that we have moved quite a bit and we may go for some kind of short-term correction. Okay, so that exhaustion gap shows that it's time to book some profits, take out some profits and look for the correction, and on dips we can buy again. So is the gap concept clear? When it's a downside gap, I will just give you an example to explain the same thing in the downside gap. Say an example of stock. Say the stock has given today a major fall. Okay, so what was the fall? Say yesterday, we take example of yesterday and today to make things easier. So the stock had opened at a price of 6, say let's take 420. The stock had opened at a price of 420, made a high at 435, then the stock closed around 380 and the low was 370. Today the stock has opened at a price of 340. That means it has opened lower than the close of yesterday and has made in between a high of say 350. Okay, so and then it closed at a price of say 310. So between the low of previous day and high of today, there remains a gap zone. That is called a downside gap. When you have a downside gap, it's a very strong sell signal. It shows that the stock has, maybe the reason could be anything. The reason could be bad results. It could be some news based gap down. Anything, maybe the market is down next day. Anything could be the reason. But a downward gap and then a closing below the opening the next day, a red candle and another red candle the next day, and there remains a no trading zone between the low of day 1 and the high of day 2. That is a gap. That shows that basically the stock is in the hand of bears, the stock can give much strong downside momentum, and you need to be watchful. Yes, I'm going to show you the chart just after this. So that's a downside gap. It can be a breakdown on the downside from a range. Then it's called a breakdown gap or a breakaway gap. And same way we can have a runaway and an exhaustion gap on the downside. So let's understand this with a chart. The best example of this will be in recent times, maybe a Glenmark Pharma. Let's see if we have in the Glenmark any gap. Yes, we do. Okay. So that's, is my chart clear? Can you see the chart? Everyone? I've shared my screen. So now what happens that here, if we see the Glenmark chart, this is on 11th May 2017. Glenmark had opened at a price of 897.75, made a high of 909. The close that day was 906 and the low was 888.05. Now next day what happens? The results came on that day for Glenmark. The results were below expectation, or you can say a bit of poor results for this pharma stock. Okay, so next day the stock opened much lower than where it had closed the previous day. So the stock opened at 815, made a high at 839, made a low at 759 and closed at 759.55. So that shows that between 11th and 12th of May, there still remains a gap. This is a downside gap. Okay. Now what happens? This shows that the momentum is with the bears, and it's always dangerous to take a buy decision on a gap down. It can be very, very dangerous unless you are very confident that there's a very good support zone downside. But the chances are, if it's a strong gap down like this because of news, bad news, so the chances are the momentum will continue for the coming days. That is what happened in Glenmark. So in Glenmark, between high of 839 and low of 888, there still remains a downside gap. And what happened? The momentum which started on 12th of May is still continuing. So from next day we had another red candle, we are going down, down and down. And from a price where we were 900, we have already fallen to a price of 607 recently. So a downside gap shows the sign of bears being strong and that the stock can fall much more from there. Okay. Now let's take an example of an upside gap. I'll show you one or two charts of upside. There's an upside gap in Tata Steel after the results. Just no, I'll tell you something. It's not advisable to enter even the stock at this point. Okay. The reason being that a stock which is in a downtrend and breaks its 52-week high after a long time, 52-week or high after a long 52-week high or 52-week low. Anyways, either of the sides, if it breaks, after a long time. So Glenmark has broken it, say, after 1 or 2 years. The chances are it might fall more, maybe another round of 10%, 20% on the downside. Because it's result-based, poor results, it is not advisable to enter this stock at this point. My personal opinion is it might come around 570, 560 zone, because that means that it broke an important support, say around 680, 670. So 20% fall from there is around 570, 540. So we can expect that it might go to that level. Well, why do you want to enter a weak stock? Tell me, Amol. You will always like to buy a strong uptrending stock. Why to buy a downtrending stock? It's always dangerous. Some people ask me, what should we buy Tech Mahindra? Should we buy Cipla at this level? I said, are you an investor or are you a trader? Okay, because both have different ways of trading or different ways of looking into the market. Yeah, this is just an understanding of the case study, because recently we are tracking this. This is one of the best example of a downward gap. Okay, look for buying a strong uptrending stock which is touching a 52-week high or has just made a new high. Say a LIC is a much better stock to buy on dips than buying a Glenmark which is falling so much. Okay, so you have to segregate between what you should buy and what you should sell. So if you ask me, should I buy a Tata Steel or should I buy Glenmark, or say should I buy a Tech Mahindra, or should I buy a, say, a HDFC Bank? So I will always prefer a stock which is moving up. Okay, so our stock which is in an uptrend making new highs is the best bet for me on correction to buy as a swing trader. Okay, so I will prefer buying a HDFC Bank, or I will prefer buying a Tata Steel rather than buying a Glenmark or a Tech Mahindra right now. With IT, so many issues coming for the IT sector right now. Yes, but if you are an investor, that's a different ball game. Then you will say, okay, I'll buy. Glenmark is a good company. Market has given too much of a fall, or too much of correction has happened because of this news. So maybe at a price of 550, 570, I will enter a small amount of, I will buy a small amount of Glenmark. What has happened to Sun Pharma? From a price of 1200, it has come down to 550. So if you are a value investor, you say Sun Pharma is not that bad a company. I should buy some amount at around, say, 550, 570. But you are a trader. If you are a trader, whenever Sun Pharma bounces back, you will like to short it, not buy it. So the trading style and the investment style differs. You have to segregate both. Clear? So I'll show you the Tata Steel chart and explain you what the upside gap means. Tata Steel 16/5/2017. This is just very recent. High was 463.05 on 16/5. That means on 16th May. The low was 455.35. The open was 463 and the close was 456.55. The next day what happened? The results came and Tata Steel results were above expectations. Okay, so the stock opened at 470, made a low of 465.8, closed around 493 and made a high of 499. So between 16th and between 17th there remains a gap of 464 and this is 465.8. So 1.8 rupees gap still remains in Tata Steel. But the upside gap on a good news is always a bullish sign. So even though it consolidated for the next 3 days, again it has moved up and touched 515 recently. Okay, so an upside gap in an uptrending stock or on a good news is always positive, but a downside gap is same way negative. Okay. Is the gap concept clear? Everyone, is the gap concept clear? No, you can't predict gap. The reason being that gap is a result of previous days, previous nights, we can say, after the market has closed. After that, there are XYZ news, whether it's good news or a bad news. So gaps are generally the result of those news which has happened or which have come out after the market. Okay. So exhaustion gap. Let's understand exhaustion gap with an example in the chart itself. Example is this. Exhaustion gap example, I can say HDFC Limited is an example. Okay, the stock has moved quite a bit in the recent times. It's an uptrend, uptrend, uptrend. It started with this move on the upside, still going on. So from a price of, in February, say 62, okay, HDIL chart, it has moved to a price of around 9900. So 100 we have recently reached. Now here what happened, if I go to this example, high was first when the range was broken. The high of this day, that is 22nd Feb 2017, the high was 66.8 and the low was 66.25. Okay, so this gap was filled on that particular day. Now here came a runaway gap between 10th March and 11th March. So the high was 73.25 and the low was, next day low was 73.8. So there still remains a gap of 50 paisa in HDL chart between March 17th and then. Okay. Now there was a Saturday, Sunday in between. So between Friday and Monday, there remains a gap. Okay. After that, the last league here, we find that HDL again gives a gap here. This is on the 8th May. So the high is 93.3 on that day, open was 86.8, low was 86.3 and close was 92.9. The next day the stock opens at 94.5, the high is 99.85. Mind you, it was a psychological 100 level as well. Okay, and then the stock closes around 97.3, but between, the low was 94.2. So between 93.3 and 94.2, there remains a 90 paisa gap. This is after the stock has rallied so much in the last 3 to 4 months. This shows, so though there is a gap, but the inherent strength has reduced. See what the RSI is showing. It's showing negative divergence, and here we find the exhaustion gap. So it shows the strength of the stock is actually minimizing, though it's moving, making new highs, but the strength has actually, in the inherent strength has reduced, and we might find some correction from here on. And that is what happened. From 100 we went on to make 82. Okay, so that's quite a bit of fall in HDIL in just about 4, 5, 6 trading sessions. Okay, this is an example of an exhaustion gap when the stock actually gets tired, and then some correction might come. ADX, is this your part of your curriculum? Tell me, of your basic technical analysis. I'll explain you ADX. Yes, everyone? Should I teach ADX, or do you want to understand ADX? Okay, first we will start with RSI. Okay, MACD. Lots things to understand. Okay. First we'll understand, which is a part of our curriculum, that is RSI and MACD. Okay, how to understand RSI. This is how we are going to understand RSI with an example here. Okay, the relative strength index is what? It shows the relative strength of a stock with respect to the market. Okay, now the RSI remains between two zones. Okay, the here in this example, it's the upper line is called the overbought zone. Okay, that is above 70. So above 70, it is an overbought zone for RSI, and below 30, it's an oversold zone. Okay. Now, what does it what you understand by RSI is that when the RSI reaches this is the 50. I'll just draw one more line and also explain you the middle line. The 50 line is the middle line of RSI. So now what happens, that when the stock is making new highs, the RSI has a tendency to go towards the overbought zone. Okay, overbought zone means above 70. It means that a lot of buying has been taking place in the stock. Definitely people are very bullish on the stock. That's why it is making new highs, recent highs. But it also shows to become a bit cautious, in the sense that it shows that the stock has been moving too much on the upside, and here fresh buying is not recommended. You can book some profits if you want. Even if you don't want to book profits, at least remain cautious that you don't get any kind of sell signals here. Any kind of sell signals at these prices shows that we might have some correction in this particular stock. For example, we take this stock itself, the HDIL, which we were looking into, and understand how the RSI has worked in this stock. Now, before I explain you how to use RSI, I'll just tell you one thing, that just because the stock has entered a overbought zone or a oversold zone doesn't mean that we will just short sell after the stock has entered overbought zone, or we'll book profit if we were long from lower levels. We will book profit just because it has entered the overbought zone. Because what happens, sometimes the stock might remain in the overbought zone for a long period, say 1 month, 2 months, and the stock from a price of, say, in this case, let's see the example of HDI. When did it first enter the overbought zone? So it entered the overbought zone first decisively around March. Okay. around March it entered the overbought zone when we had a runaway gap. Okay, this was the point when we had a runaway gap. So around March we entered. What was the price of HDL at that time? It was around 76, 77. Though it entered the overbought zone from 76, 77 zone, we went on to make 102 from there, and the RSI still remained in the overbought zone. So just because the stock has entered the overbought zone doesn't mean that you will short sell. Never do that. If you would have done, you have lost money in March, you would have lost money in April, even in May beginning you would have lost money just because of shorting. So never short a strong stock unless there are very decisive sell signals. So here just because it has entered the overbought zone doesn't mean we will short. It means just remain cautious and alert that if you are long, you should, and the first signs of caution or sell signal, you should exit some portion of your portfolio. And if you want to short, you need to have some decisive sell signal to short the stock. Otherwise, don't even short. Okay. Now what happened after entering the overbought zone? For so much, the HDL kept on making new highs and the stock was also making new highs. The problem started from 17th April 2017 when the stock was still making new highs, but the RSI started leaving the overbought zone and making lower highs. When the stock is making new highs, it's an uptrend, but the oscillator starts making lower highs. That is called divergence. Now divergence is a very, very powerful tool which makes you first aware that the inherent strength of the stock is reducing and it's time to book some profits. You may not sometimes know the exact level or exact price where you should short or where you should exit your long positions, but it shows that at least lighten a bit of your positions and you might get some opportunity to again buy them back at lower levels. So the same thing was with HDIL. The stock again corrected, it was making negative divergence, and though the stock was making new high, the RSI went on to the oversold zone. It went below the middle line, which is a support line of 50. So it was another round of weakness, and the stock was still making a new high of 101. So it shows you that it's time to book some profits. Okay, and then you had a reversal signal called dark cloud cover here, and from dark cloud cover we went on to make from 102 in just 5 trading sessions we went on to 82, which is a very big fall for HDI. Okay, and what happened to RSI? It went on below the 50 zone. So is the concept of RSI in case of divergence clear? Yeah, now I'll explain you how when it's a buying, how, yeah. It's the calculation of RSI. It's how the RSI is calculated. Do you know the calculations of RSI? For that, you have to go through your book once and understand how the RSI is calculated. It takes a lot of calculations, and according to that calculation, the RSI value is taken out. And it's called a oscillator, a leading oscillator, because it is supposed to give you a hint of price fall or price rise before the price does. Otherwise, it will never be called a leading indicator. Say moving average, if I say, it's a lagging indicator because it takes its value from the closing price of the stock itself. So it just takes the average of the closing price, and whatever the average is every day, that is plotted in the form of graph, and is known as moving average. So because it directly takes only the closing price into it takes the closing price and then it calculates, so it's called a lagging indicator. But when I talk about RSI or stochastics, it is, and even ADX, it is supposed to be a leading indicator. A leading indicator will give you a first hint of a fall or a first hint of a bounce back before the price does. That's why they are useful in your trading. Okay. Now, is the concept of RSI clear? Everyone? One best example of Nifty we can see in RSI and understand how it goes about. The CNI itself. If I go by the chart, it's still making new highs. Okay. But what is happening to the RSI? After reaching the overbought zone, even though we are making a new high in the price chart, the RSI is making lower highs. Okay, this is never a good sign. Okay, it shows, but that doesn't mean we will short. Just because the RSI has given me or is making lower highs doesn't mean we will short. It means we need to remain cautious and we will not take too much buy positions in Nifty, or it sometimes may happen even for 2 to 3 months. The RSI might remain in the overbought zone making lower highs, and it might still, the stock might be going up and making new highs unless we get a very strong sell signal on the upside. Never short a uptrending stock. So never look for shorting Nifty at just because RSI has given a sell signal or has started making a divergence. Okay. Yes. Please, whatever you want to say, write it in the chat box. Okay, what is a super trend? How to draw RSI? You want to understand? You don't have to draw anything as such. These days, any software you take, or if you want to learn just basics of and you want to learn technical analysis, you can always go to iCharts. iCharts provides you free of cost online software. For starters, that is good. So you can always try and plot there, and it's free. Just you have to register there and you can try draw RSI, plot moving averages, and learn about how to make trend lines in that. Okay. Now there's no concept as a super trend. What does the thing mean? Super trend means what? The stock has been in a very major bull run or a very major bear run for a long time. So I can say an example of HDFC Bank has been in a super uptrend, Yes Bank was in a super uptrend till recently. It had moved from a price of say 150 just 3-4 years back to a price of 1500 in just in a span of 3 to 4 years. So it has been in a massive, or you can say a super trend, uptrend. But when I talk about a stock like JP Associate or say a stock like DLF, it has been in a super downtrend in the long term. So our DLF from a price of 1300, 1500 went on to make a price of 120 just last year back. So it's a super downtrend for DLF or say a JP Associate from 400 to a price of 20 rupees is not very good for our investors. It's been a very strong downtrend for JP Associate. Yeah. Now super trend, see, traders do follow super trend. What does that super trend mean for day trading? That means for the last 1 or 2, if the stock, say for example, just recent example I will give you, that market was making a new low 2 days back before expiry on Wednesday. It was falling down to 9350 approx level in spot. Okay. At that point, Voltas, what did Voltas do? Anybody tracks Voltas? Voltas made a new 52-week high when market was falling about 100 points. It had fallen a point, not even 100, more than 100 points in just 3 trading sessions. Voltas made a new 52-week high on Wednesday. That means if you are a day trader, it's time to pick that stock. If the market bounces back from here, this will be the first stock to start an upside move. So when it makes a 52-week high of 444, 445, that itself, or even say a 3-day high, the market is falling down, but it has made a 3-day high. That should be the first understanding that this stock is in an uptrend. If the market bounces back, the stock will be in a strong, or as you are saying, a super trend. That is what happened in Voltas. From a price of 420.25 in just 3 trading session, it went on to make 500. Okay, so that is a super trend for day traders, that whenever now this stock even falls for 3-4 rupees, you again catch it near a moving average, a day trading moving average. Again it bounces and makes a new high, you again book profits, keep a trailing stop loss. Again in the next 1 or 2 days, if it bounces back near the support, you buy, new high making, you exit your position. That means you're following that super uptrend in that stock. Similarly, if a stock is falling, if you would have shorted Glenmark, you would have made a lot of money in the last 3 days. It went on from a price of 670 to 600. That means 10%, 11% in just 3 trading sessions. So you are following the downward trend. Whenever it goes to a resistance near moving average, you short again. Again it makes a new low, you book your profits. Again let it go to a resistance level, you short again. So that is a super trend for day traders. Clear? And is my voice clear to everyone? Voice clear to everyone? Now, what do you want to understand? MACD? Should I start with MACD? Okay. Before that, I'll just show you how normally even in any chart you have iCharts, or whether at some point you will your broker will give you an online software technical software, how to plot any indicator. It's the same way, okay? Let's understand that. I'll just remove it for the time being and explain you how to just go to any drag down in your software, whatever software you will have, just have a drag down. Okay, this is relative strength index. Normally inbuilt one is a 14-day RSI. You can always customize according to your needs. You can have a 9-day RSI. You can have a 12-day RSI. Some people use 9, some people use 21-day RSI. It's upon you. As you learn about trading and you read books, you can always customize. But the inbuilt, the most popular one is the 14-day RSI. Okay. Now it will ask you what color of RSI you want. If you don't want a red, maybe a purple, maybe orange, anything you want. If you want it to be a bit fatter, just put this. Parameters 14. Okay. Now what happens? You get your RSI in purple. If you want to change the color, you can always do that. Say orange or say any other color you want. See, it will change the color. And it's inbuilt. You don't have to plot anything. You just have to plot the RSI 70-30 zone. That is a overbought oversold zone. The software itself will show you. Okay. So let's start with MACD. First, let's plot MACD. Then I'll explain you what MACD means. Just to drag down. This is MACD here. We'll just plot it. Again, the parameters are there. Generally, the 12-26-9. The signal line is 9-day moving average of the MACD. I'll explain you the concept. But before that, normally the inbuilt one is the 12-26-9. You can customize it if you want to change. Color style, if you want to change the color, any other color you want. Okay. This is how the MACD, if you want it to be a bit fatter, just click on it and make it a bit fatter. So it's more bold. Now MACD is how this looks like. There is a zero line in between and this is the middle line or the zero line. These are the extreme points of MACD, the lower part and the upper part. So the 100, 150 on the lower side or the 200 are the extreme zone of MACD. Now how is the MACD or the moving average convergence divergence? What does it mean? Do you understand the concept or should I explain it once again? Eye charts, real-time basis. If you want to go for real-time analysis, you'll have to, generally eye charts is for EOD, that is end of day. For real time, if you want, you have to have a broking account with Sher Khan, probably. They provide a software called Trade Tiger. For learning purpose, that is good. But once you become a good trader, having a Spider or a Falcon or a Metastock will be a good option. But for if you want a free software for the time being to understand, you have to have something like a Trade Tiger, and some more other brokers also provide these days. Uh, Religare also provide, others also provide these technical software. But how reliable they are, I don't know. They may be a bit late because it's free of cost, so they are not going to give you exact, minute to minute analysis. They will be maybe delayed by 1 minute that way. Okay, so should I explain MACD or is the concept clear? Okay, so MACD, that is the moving average convergent divergence, popularly known as, is a lagging indicator. Why it is a lagging indicator? The main reason being that it gets its value from the moving averages itself. How? Let's understand the formula. MACD equals to the long-term moving average minus the short-term moving average. So that means it gets its value from the values of moving averages, which are themselves lagging indicators. So 1226 means 1226.9 is the inbuilt MACD formula. What does the 1226.9 mean? That the longer term moving average means the 26-day moving average value. MACD equals to the 26-day moving average value minus the 12-day moving average value. So every day, whatever is the difference between the longer term moving average and the shorter term moving average, that is plotted in the form of MACD. So what is the signal line? The signal line is the 9-day exponential moving average of the MACD itself. So whatever the MACD value comes every day, if we plot the 9-day moving average value of that, that is the signal line. So everything comes from the moving average. If a stock is in an uptrend, then the longer term moving average will always, the price of that will always be lower than the short term moving average. So if I take an example of State Bank, say, then State Bank, if the longer term moving average or say a 26-day moving average, say a price is 260. And what will happen to the price recently? Say a 300. So the difference between the two moving averages will give you the MACD value. When the stock is in an uptrend, the MACD value will be on the higher side. That means it will be above zero line. And if the stock is in a downtrend, the MACD value will be below the zero line. Now just because it's below the zero line and above the zero line will not give you a very good trading opportunity. It's not easy as it is, it's a lagging indicator. And then getting a sell or a buy signal on MACD can be after the price has moved quite a bit on the downside or the upside. So how to use a MACD in your trading? Let's understand that. We are going to the chart and try to understand and interpret MACD. The books will tell you that whenever this darker line, this is called the MACD line. Okay, MACD value is this. Value here is 78.57. This is the MACD. And the dotted line is your signal line. Okay. What the books will say you, when the MACD is in an overbought zone or an oversold zone, that is the time you should look for any buy or sell signals. How? It will tell you that, suppose an example here, it's when it touches 100 or above in your particular chart. So here the MACD value is 132. So it is above 100. It's called an overbought zone or an extreme zone. We don't use the word overbought for MACD. but an extreme zone for MACD. And what happens here, that the MACD after being above the signal line, that is the red dotted line, when it starts falling below it, that is the time when it gives a sell signal. Okay, so it gives a sell signal means that we might have some correction in this particular stock. But what you see here, the stock has already fallen from a price of, or Nifty has fallen from a price of 8950 to 7942, and here it is giving me a sell signal when the major of the fall, most of the fall has happened. Okay, so that means that MACD in itself is not that a powerful tool. It's a sell signal here, but what has happened here in market? It's a double bottom, and there is a strong move on the upper side. Okay, so what happens when there is a strong move on the upper side? What happened in the chart? MACD was a buy signal here. After MACD being below the zero line, when it's first, after being below the zero line for a long time, first starts moving above the zero line. That is the first signal which is called a crossover in the MACD. This is the first signal here, that being above the zero line is a positive sign. But just because it has crossed the zero line on the upside doesn't mean we will take a trade decisively. For taking a trade, we have to do what is that we have to check the price chart. And in the price chart, we see a double bottom. When this kind of a double bottom happens, the stock made a double bottom, but the MACD did not make a double bottom. Instead, after making a bottom here at this price, it made a higher bottom. The stock is still making a double bottom. So this shows you that there is some inherent strength, and also the MACD has started moving above the zero line. It's time to buy the stock with a calculated stop loss. Double bottom in itself after a downtrend is a very strong, powerful buy signal. Plus a MACD above zero is a sign that you can buy it. Again, it gave a sell signal here in this point, but the stock or the Nifty has not given any powerful sell signal till now in the chart. So unless you don't get a powerful signal along with MACD, the price should be considered the most important thing. Oscillators are just the additional tools. So unless you get a very strong signal or sell signal, you will lose money if you just take MACD sell signals into consideration. Okay? Is the concept clear of MACD? I have showed you both the long side and the short side in just one example. Yes, everyone?
मैं जरा सोता हूँ बहुत नींद है हाँ लगाएगा ना पानी का बटन लाइट ऑफ कर और क्लॉक देखना और
Yeah, so just because it's oscillated doesn't mean we'll take a trade. First, price chart is the most important thing, and then comes the other tools. Other queries? Okay, Fibonacci. Okay, explaining both. First we'll go to Fibonacci. Suppose in this example itself, best is the index, and if you want some other charts to understand Fibonacci, I'll help you out with that as well. The stock had moved, Nifty had moved quite a bit from 6825 to 8915 in 2016 and then started a massive fall. After the massive fall, you want to know from where the stock can or the index can take a support. So we draw a Fibonacci. How do we draw Fibonacci? We just take Fibonacci, plot it from the lowest to find out support. It has to be from the lowest low recently to the highest high. It has to be this way. Lowest low to highest high. So this was a 50% retracement level for Nifty. That means the total move from a price of 6825 to 8970 approx. The total move, 50% of that was this fall, and just 50% Fibonacci, we got a double bottom. Okay. Let's check what RSI did at that time. RSI, we had a positive divergence. In RSI, we had a positive divergence. MACD gave a buy signal here. There was a positive divergence. Stock was making new, Nifty was making new lows, but RSI was making higher lows. Okay, and just at the 50% retracement, we had a double bottom. So these are signs that probably the reversal is nearby, and we can get a bounce back from these levels. So this is to find out the particular support levels. This was the third. This is the final retracement of the 61.8 is considered the most important support level for Nifty of long-term chart. Suppose I want to draw the resistance levels for Nifty from here. After the fall had started and there was a bounce back from this double bottom, how do I find out the resistance levels? We plot it from highest high to lowest low. Always understand the difference. There it was from lowest low to highest high to find out support. For resistance, it has to be from highest high. I'll just plot it again to make you understand. So from highest high to lowest low. Only for some time, even one, it did take a resistance at the second Fibonacci level of 50%. But at the final level, it did not. It moved above this, and this level itself became a support, and we went on to make new highs. So once the third Fibonacci resistance level was broken decisively, and it was acting as support, you have to understand that the market is in a very strong bull grip, and these levels will not work for the time being. Okay. Any other chart in which you want to see Fibonacci? I'll show you. Reliance? Okay. By the way, what is this in Reliance? Oh my God. This is a, tell me, students, you have done technical analysis. What is this price pattern? This is developing in Reliance. What do you think is this? What price pattern it looks like? This is a double top. See, two tops made almost at the same price after a massive move on the upside. This is a double top. RSI giving negative divergence. Okay, and double top means that we can have a good amount of correction in Reliance from here on. Okay, for the time being, 1380 will act as resistance. Even if we break 1380, unless we don't break 1480, 70 zone, we can't say that this is a false double top. Okay. Now I want to find out the support levels for Reliance. If the fall has already started for Reliance, what could be the major support level for Reliance? So the recent major low is this, and the highest high is this. So I draw a Fibonacci retracement from major low here. Just hold on. Fibonacci has to be drawn from the major low. You can take this as major low, the one in November if you want. To the highest high. So around 1270 will be the first level of support, major support for Reliance. Whenever there is a fall, second will be 1200. That will be the 50% retracement, and the final one will be 61.8. But for the time being, Reliance has made a double top just after a major move, and with RSI giving divergence, you don't know what it is up to. There might be some correction in the coming days or maybe in the coming months for Reliance. Now suppose after the stock had fallen quite a bit, then I want to find resistance level. Say a ONGC. I go to ONGC and explain you that. So if I want to find the resistance, I have to draw Fibonacci from highest high, recent highest high. Highest high among this is 209. This is 211. So I will take this to recent major low. Then I will get the resistance level. Is the concept of Fibonacci clear? That depends on what kind of trading you are doing. If you are doing a general swing trading, daily period of say 1 to 2 to 3 months is okay. If you are doing swing trading for longer periods, say 3 to 4 months, then you have to go to weekly charts. Even if you take daily charts, you have to take 6 months into consideration. If you are taking for long-term analysis, then you have to go for more longer term, say 1 year. The longer the time period you are taking, the bigger will be the low and the high of period. But suppose I'm talking about very short-term trading, then maybe last 1 week or 10 days, whatever is the highest high and lowest low, you can draw Fibonacci from that. That will give you short-term support and resistance levels. Is Fibonacci clear? What else? Any other queries? The syntax story with technicals. It's a demerger story. How do I explain it with technicals? This is something which is fundamental. Okay, because why has the stock come to a, it has been, there has been a demerger in this syntax. The plastic business has been separated from the tubes business, etc. Okay, now this is something which I can't explain you with technicals. Technicals will show you today that the syntax, let's see the syntax. For today it will show a big gap. See, it's a big gap. Stock has given a gap, but this is not actually a gap. There has been a demerger in syntax, and that's why this, because of demerger, one particular company has been broken into say 2 to 3 or 4 parts. So the stock price has accordingly been adjusted by the exchange. Anything else? No, no, it's not a nosedive or something like that. It's because it has been adjusted. It has been divided into say 4 companies. So that's why from that price it has fallen to a price of 2025. It's not a technical stuff. It's fundamental news based demerger. Any other query? You are clear with candlesticks? That your coordinator will provide you. You can ask this from the coordinators themselves of this course. They will provide you. before that, let's understand ADX. How to filter some stocks. For that, you will have to go for advanced technicals, which they provide. This is which is a part. This is a part of your basic. So in basic, we can't explain you so many things. There are a lot of things you have to cover in advance. You understand each and every indicator in a class with in-depth stuffs, how to use them, how to take trades, everything. So it's a different course in itself. For that, you have to do the higher course from here. This is the basic one, just to get you an idea about what technicals are, what different tools in technical analysis are. Now I'll explain you ADX. This is called the average directional system. This is how the ADX looks like. To understand ADX in depth, you have to go for higher course from Trident Academy. But here I'm just going to explain you the basic stuff. What ADX means, what are the different tools in it, how the plus DI minus DI is. Okay. So this is the ADX line. It's a formula based stuff. Again, you don't have to do any formula, or you don't have to do any calculations. You just have to plot it from your software, and everything is embedded. The inbuilt ADX values, 14-day ADX is very popular, but you can always customize it. If you want, you can have 9-day ADX, you can have 7-day ADX. Okay. Now what happens here, this is the ADX line in this chart. This is ADX is also called the average directional index or an average directional movement. Okay, this blue line here is the ADX line. The green line here is the plus DI. The red line is the minus DI. Okay. Now what happens? Whenever the stock when first I'll explain you the concept of ADX. ADX, when it is below, the value of ADX is below 20, that shows that the stock is in a no trend zone. It's in a consolidation zone. It's not trending much on either side, neither on the upside nor on the downside. The stock is in a range, or maybe it's lackluster, it's not moving too much, it's in a zone. That is when the ADX normally is below 20. When the ADX, after being below 20, starts moving above 20, that is the first time when you understand that a trend is developing. But you can't be sure of a trend unless ADX starts moving above 30. So when the ADX, in this case, just an example of Nifty I'll explain. But before that, let's understand the concept, and then I'll use the example of index or maybe the stock itself. Okay. So here it shows that when the ADX is below 30 or 25, we can't necessarily say that the stock is in a trend. Now ADX is neutral. ADX doesn't show it will be an uptrend or a downtrend. Plus DI and minus DI shows us where we are heading. ADX below 20 means whether it's a downtrend or whether it's a consolidation, the stock is not in a strong move on either side. But once ADX starts moving above 30, that is the first time you understand that the stock is developing a trend. If it sustains above 30, starts moving towards 30, 32, 35, that is the time when you understand that a strong momentum in the stock might develop, which was not there for so long. This trend might just develop. Keep a watch in the price chart. Just ADX is not enough. Price, if at that moment when the ADX has started moving above 30, say a stock starts showing signs of revival, maybe a cup and handle formation, maybe a double bottom, maybe a strong candlestick reversal signal, anything could be a trigger, plus say a RSI positive divergence. That shows you that whatever was the momentum which was lacking till now is now developing, and we might have a strong upside move in this particular stock. Okay, so now look for price chart. Any moment you get a confirmation from the price chart, it's time to take a move. If you get it right, which normally happens once the ADX has passed the 30 level, it will go towards the 45, 40, 45, 50 level. And that by that time your stock might have given you a move of say 10, 15, 20% already. So it's time to catch it fast and early. And then when you get it in the 45, 50 zone, it's time to book some profits. Because when the ADX starts moving above 50 level, that is the time when it shows the stock has been in a very, very strong momentum. Here there might be some correction and it might again go to test towards 35 or 30 zone. That is the time to again look for buying the stock. Now similarly, a downtrending stock also can have an ADX. Suppose the stock is falling. I'll show you example of both right now after this. When a stock is falling and it has just started the fall. It was in a range, or after the fall for the last 2 months, it was not moving too much on the downside, nor was it moving up. It was in a range. Now it has started falling and the ADX has started moving above 30. So that is the first time when you understand that the stock is starting a momentum. But just because the ADX is moving above 30 doesn't mean that the stock will move up. It means the momentum is starting or a trend is developing on the downside. Look for a shorting opportunity. You might get a candlestick reversal pattern there. You might get an RSI negative divergence there. You might break an important pattern, price pattern, a double top, or maybe a trading range was there, a triangle was there, and that has given a sell signal. So ADX in itself cannot be used just single-handedly, but along with the price chart and other tools can act as a very, very strong indicator of a development of a trend. So Glenmark might have given you that kind of a trend or a starting beginning of that trend, and then we had a massive fall for Glenmark, for Tech Mahindra, or for say Cipla, for Sun Pharma, and a massive upside move for the other stocks, okay, which have been an uptrend, whether it's a State Bank or whether it's an HDFC Bank. All these stocks have been in an uptrend. Okay, so this shows the particular strength of a trend. Plus DI and minus DI is developed from the ADX or the closing prices of stocks, the high-low closing price of the stocks every day. For understanding the plus DI and minus DI, you have to go for the advanced courses, how to use them in your trading. But before that, I'll explain you ADX with chart. You want me to explain ADX with chart? Okay. what was happening to ADX at this point? Let's do it with a line. Let's take a question as 25. ADX was below 25 for a long time. And what is happening to CIPLA? In a range, in a range, in a range, in a range for a long, long time. That is from February till April. Now what happens that now in April, first time the ADX starts moving above 25, first time above 25, then 30 zone it's touching. Then what happens from a price of 594, a massive fall starts. And where do we fall from here? We have already gone 100 points down. So we have already touched 480 just in about a month. That is the power of ADX. Whenever it develops on a strong mode, it's a sign that we might get some strong momentum downside. In this case, it had started here and the stock was still in a consolidation mode. So it was giving you the first signs that probably we are heading for a trend in CIPLA after a long period of consolidation for 3 months. Let's see, was the price chart showing something? The price chart only gave a breakdown from consolidation of a long time. This was the consolidation. For so long this low was not broken. This was the first time the low was broken, and this low which was broken acted as a resistance, and from there we had a major fall in CIPLA. Let's take a reverse side. So ADX is still moving up, but the stock is moving down. Let's take some other example. For a long time, Yes Bank was below 20, 25 zone. At least it has to move above 25 to give you a strong move. ADX below 25, 25 from a long time. We were not moving up. Then on January 2017, the ADX started moving above 25. That is, it started touching the 30 zone and started moving above it. That is the first time that we understood that we are heading for a strong trend. And what happened in the price chart? It was a double bottom. A double bottom in the price chart along with a RSI. RSI, what was RSI doing? Let's check out. So RSI was making a double bottom as well. Here also a double bottom. And 80 moving above 30 was the first sign that we are we are going to have a strong trend from here on. And from what was the price? From 1200 we went on to make 1600 just in a span of 3 months. Are you understanding ADX, everyone? Is my voice clear? Is the ADX clear, everyone? Okay. Now somebody is asked for RBL Bank, to analyze RBL Bank. So I'll go to RBL Bank and check out once. The momentum has developed in RBL Bank. Once it started moving above 30, so what was the price? Around 420. It started in February. And when I told you when it reaches an index, ADX level of 51, you should always become cautious that it's time to book some profits in case you see any kind of correction in the price chart or consolidation. It's time to book some profits because it has reached an extreme zone in the price chart. And what happened with RSI? Started giving negative divergence. Though the stock was making new high, the RSI here at this point started giving negative divergence. So that is the first sign that if you are long in RBL, look for booking some profits. Stock still making new highs, RBL making new lows, ADX reached an extreme zone of 50-51. So it's time to book some profits, and then we have corrected till 500 from a price of 600. So it's a good amount of fall. Are you understanding the concepts? Now if you want to find out the support levels for RBL, I'll explain you how to use Fibonacci. If you want to, for a shorter term, you take this. If very short term, still you take this. It's better. So around 490 will be a good support zone. 460 will be a good support zone. All these will be good support zone even if it falls. And 61.8 will be a very, very good support zone for RBL. Is the concept clear? RBL Bank, any other stock? Any other stock you want me to analyze? Any other chart you want me to analyze? Should we wind up the session? I hope I have made a lot of things clear to you. More your coordinator will help you out with. I tried my best to teach you in a short span a lot of practical stuffs. I am a trader myself, an investor as well, and I'm doing technical analysis for quite a few years now. So this practical session hopefully was useful to all of you. Thank you so much for your cooperation.